Well, I really hate bringing real estate back into the picture again. I, I, I feel like I have no choice. Now, I do have some news from our Australian friends. They're kind of in the same boat we are too. And the mainstream media, the politicians, the hopium smokers, real estate's fine. No, this is not a trend, even though it's a trend. Not a trend. It's just a one-off. We're good. Someone sent me this story. This is an interesting story, but I want to start off with one far more interesting to me. This one's from Zero Hedge. This other one's from ABC Australia. This is going to blow high sky observations on Canada's housing market. And yes, by the way, in case you're wondering, the neighbor next door, old America, nothing's changed here either. What I'm about to read you, in matter of fact, in both of these things I'm about to read you, it's the same for America. Same thing. Because they're doing some of the same stuff in America too, such as, these little radio ads you hear. Come become the next real estate mogul. Come to our seminar for $150 and learn how to flip houses and yada yada. They're doing it in America, and they're certainly doing it in Canada. And apparently, according to this gentleman, there was no shortage of sheeple that flooded in there, paying that big buck to get in there and figure out how to do it. And we're very excited about it. These are sheep who go in at the top, never learn their freaking lessons, and get led to the slaughter each and every time. You have to tell yourself sometimes, trying to wake people up, but damn it, there's a lot of idiots out there who just deserve it. You deserve to be screwed over again and again and again. If you cannot see what happens and understand there are people doing things against you, they're lying to you, and you believe everything is all hopium smoking, great, you deserve to get screwed again. I thought the old saying was, and I'm going to say this like George Bush, Dodo Bird Bush said, screw me once, shame on you. Screw me twice, well, there's not going to be a second time. How about a third, fourth, and fifth time? Savings and loan crisis, easy money, everyone's approved, resulted in the same thing we dealt with in 2008, back in the 80s, savings and loan crisis, except it was a tiny amount of money. Hundreds of billions of dollars, but it's a tiny amount of money. We had a $900 billion TARP fund. We then had $10 trillion out of the national debt in 8 years. Okay, so guess what? The next one's coming soon. Can't wait to see how that baby implodes. But anyways, this is going to blow sky-high observations on Canada's housing market. For months, we've been warning about the real estate bubbles re-emerging in various markets around the world, from Canada to Australia, which, again, funny enough, I've got an Australian article that he's not even talking about I want to talk to you about. See article, there are 66,000 empty mansions in Vancouver, and Vancouver home sales crashed 40% as Toronto home prices soared 22%. And while facts and figures clearly indicate that certain markets are bubbling over courtesy of all the same mistakes that caused for the Great Recession in 2008, nothing helps to confirm the truly obscene nature of a real estate bubble, quite like attending a good old-fashioned get-rich-quick real estate expo. As such, below are the musings of one financial market observer who recently attended the Canadian Real Estate Wealth Expo as a joke, but walked away convinced the system is about to blow sky high. Originally authored by Tim Bergen of On Beyond Investing. Originally, I thought this would be a bit of a joke. There were billboards in all the Toronto subway cars advertising the Canadian Real Estate Wealth Expo. Learn how to become a millionaire. I thought this was so ridiculous it may be fun. What better way to experience the top of the housing market than watching Tony Robbins and Pitbull, along with a bunch of U.S. real estate professionals, explain, again, which real estate professionals? U.S. real estate professionals, explained how Toronto real estate is the path to riches. Prices were originally $150 a ticket, but I was able to buy one for $50. While it deeply bothers me that I paid $50 to these shameless, amoral self-promoters, I thought it would be worth it to witness in person the top of the housing market. That is a Jason Four maneuver right there. Let me go do this just to see what it's Like, had to go with my dad. Dad, you want to go to Seminole Casino bingo thing? He tell me about these people rubbing the machines, press the button on the screen, tap it. Oh, I lost. Rub the screen a little bit harder this time. Good luck. Oh, I won. But it took me 2 rubs. So then they go into 2 rubs first and then hit it. Oh, I didn't make it. Maybe I need 3 rubs. 3 rubs? Nope. Try again. Oh, 1. What? Are you serious? Yeah. Oh, yeah, absolutely. They have their little knickknacks they put up there. Oh, come on, Dad. No, I'm serious. Dad, can we go? You want to go tonight? This is years ago. So we go. I see the old lady in the little remote control wheelchair with the oxygen tank and the little line in her neck. Going away. Yep. Let me go over here and gamble some money away. Yeah. And I witnessed it firsthand. Tap the screen. Boop. Oh, yes, I won. Do exactly what I did last time. Tap it right there in that spot. Oh, I didn't win. Let me tap it a little bit gentler. 2 times. 1. Yes. Try it again. I'm watching this. And I'm thinking, these are my fellow brothers and sisters. Something's wrong here. I learned so much by experiencing that day. Yeah, I did put $10 or $20, I think $20 on one of the little cards, magic cards. I can't just stand there walking around observing people, Oh, Dad, what do you want to do? We'll play show me some of the stuff you do. All right, so $20. My dad both $20. It was well worth the price of admission, if you will, to witness what I saw in that damn casino. So I can really appreciate what this guy did. I had thought there can't be that many people stupid enough to attend this, but I was very wrong. 15,000 people were there. I was blown away. Bubbles are largely psychological. This crowd was tangible proof of that. 15,000 people in one spot listening to Americans explain why real estate in Toronto is an exceptional investment. The whole experience was horrifying. The crowd was very well dressed, middle to upper middle class from appearances, and super excited to hear how much money could be made if you just buy real estate, most of them clearly already owned. The first real segment of the expo was a panel of Canadian developers and real estate agents giving their views on the market. It actually started off a touch bearish, which surprised me. 2 of the panelists were saying that prices are exceptionally high and no market goes up forever. With that slight bit of caution thrown out there, it became a real estate FOMO building talk. There are apparently 2 very important things to know when dealing with real estate. First, you have to face your fear. This fear is to be ignored, and then you should just do it and buy now. The next step is to find what you can afford and then buy it. Ignore all non-doers. Don't overanalyze or focus on the numbers. Just effing buy. The ally fears the speakers. 2 ally fears the speakers are actually quite clever, as if shift between a long to short-term focus when it suits. For example, now is a great time to buy because short-term the market is on fire. However, if market's cool, then you just hold because it always goes up long-term. And you are a savvy long-term buyer, aren't you? By showing no scenario where you can lose, I can see how this pitch works on the susceptible. The second important factor in real estate is financing. Not everyone has money, so what can they do? The answers were shocking. Be creative was the first response. Pool your money. Borrow from friends and family. Own just 5% of a house. Get the money however you can and just do it. Remember, it only goes up. Other financing suggestions were get cozy with a lender and they will bend the rules for you. The fact that the biggest condo developer in Canada, Brad Lamb, said lenders will bend, but not break apparently, rules to get you financing in front of 15,000 people, with most people smiling and nodding, was shocking. So there you go. When it comes to Toronto real estate, just do it. Using borrowed money any way you can get it. The booths outside of the presentation hall were just as troublesome. Plenty of high double-digit monthly yields, retire early with real estate, everyone needs a place to live, buy apartments type of messages. Almost all of these pitches were second lien lending. Most offered yields in the 8 to 10% range. The presentations all suggested that you can borrow money, if you don't have it, at 4% and then buy these investments at 10%. Easy money. The apartment pitch booth was like most other pitches. It revolved around stable cash flows plus mortgage down payment by the renter, plus equity appreciation equals profit. Now that all sounds great, but owning a condo at current prices in Toronto is a negatively carrying asset. So where does this cash flow come from? Further, investing in apartment funds is even better if you borrow the money to do so. The pitch goes on to explain that levering a 30% return makes you more money than not levering. The Paramount equity pitch was also interesting and stated in all caps, high double-digit returns on your cash, RRSP. This product pays monthly and is a second lien mortgage with a 1-year term and LTV, loan-to-value, whatever, of less than 85%. Paramount uses clever language that states they cover the cost of defaults, but that they mean they pay some of the fees, not the default risk itself. There was a space to pick up business cards. I got quite a few from real estate investors. I plan on emailing them all just to learn how bad their pitch or product is. I want to learn more about how these second lien investor pools are sourced and just how bad this is going to be. Also, perhaps there will be an opportunity to meet a bunch of distressed sellers before they even know it themselves. Now, in any of this, was there ever a mention of risk? Nowhere in any of this was there ever a mention of risk, the dangers of leverage, how terribly negative equity can be, how that can trap you, etc. The amount of shadow leverage in this system is crazy. The terms on these second lien loans is 1 year. What happens when all these loans are called? Even lenders with first positions will see clients sell when these loans become due and there's no money to pay them. This is going to blow sky freaking high, he says. Absolutely. We've learned nothing. Markets are all-time high, except the Dow Jones down 273. What? Dow Jones today. Down 237. Had it backwards. And for what? Nothing happened. There was no real news. Why did the markets crash? I thought the green shoots, man. Come on. So let's talk about Australia. Let's put a shrimp on that Barbie. I have to say that, as I said, every time I talk about Australia, you have to say that or you're not American. Reserve Bank concerned on highly indebted households. Real estate bubble. Really? This is, again, brand new articles here. The Reserve Bank's warning about the risks of a potential real estate bubble in Sydney and Melbourne are getting louder. The March minutes released today underscored the Reserve Bank's concern about how highly indebted households would deal with a shock from a combination of rising unemployment and falling consumption. In its most recent meeting a fortnight ago, when the board kept rates on hold, the RBA did not appear to see an end to accelerating real estate investment in Australia's major East Coast cities. The RBA warned that recent data continued to suggest that there had been a buildup of risks associated with the housing market. The RBA said the continuing strength in real estate investment remained concentrated in New South Wales after dwelling investment rebounded in the December quarter. Conditions appear to have strengthened in Sydney and remained strong in Melbourne, the minute said. These cities had continued to record brisk growth in housing prices and auction clearance rates had remained high. Capital Economics chief economist for Australia, Paul Daly, said, or maybe that's just Paul Dales. Paul Dales said the 2 cuts in interest rates by the RBA late last year led to a surge in household borrowing. The acceleration in house price inflation in the fourth quarter of last year has undoubtedly continued into the start of this year and will remain a thorn in the side of the Reserve Bank of Australia for a while yet, he said. Little doubt of bubble in Sydney and Melbourne. The Reserve Bank's warning about the risks came after ASIC chairman Greg Medcraft said there was little doubt that a real estate bubble existed in Sydney and Melbourne. ABS data released today shows home prices have risen 4.1% in the fourth quarter. Sydney prices have surged 10.3% on a year-to-year basis, while Melbourne jumped 10.8% on a year-to-year basis. If this is not sounding familiar, 2003 started 4, 5, 6, oh my God, 7. House price will keep going up. Buy a second one, get a second mortgage. Flip the house when you're done. Oh wait, now both are underwater, and I can't afford either of them, so I'm just gonna have to walk from one of them. Right. This is how it ends. Borrowing for housing by investors had picked up over recent months, and growth in household debt had been faster than in household income, the minute said. However, the Reserve Bank made the point that the housing risks were centered on the East Coast, while growth in other parts of the country was sluggish. Despite better than expected economic growth in the December quarter, the Reserve Bank pointed to weak wages growth, with household savings continuing to decline. Members noted that over the past 2 decades, movements in the Australian household savings ratio have been much larger than those in similar economies, the minute said. And last week, RBA Assistant Governor Michelle Bullock, not to be confused with Sandra Bullock, warned that an acceleration in investor growth could pose a risk to the financial system in the event of a downturn or global shock. The RBA was also concerned that labor market conditions remained mixed and that employment was not quite as strong as the headline figures indicated. The rising Australian dollar remained a concern, and the RBA believed an appreciating currency would complicate the adjustment of the economy. As the mining investment boom fades, the Australian dollar has been sitting around 77 US cents after the US Federal Reserve signaled a more cautious path to future rate rises. So, what do they have a problem with? Despite better than expected economic growth in the December quarter, the Reserve Bank pointed to weak wages growth, with household savings continuing to decline. So weak wages growth means inflation is beating you. Your dollar doesn't go as far. Therefore, you have less disposable income because things cost more. And you're not getting the pay rate to keep up. Okay, one problem. And as I said, number 2, household savings continue to decline. Does that sound like a country you know across the pond? In any other Western country for that matter? What's the old saying? Half of Americans couldn't write a $500 check if their life depended on it right now. And it's actually good, maybe I should say, because you can certainly write a check and it'll bounce, but assuming the money's there, there's no money. They ain't got it. So you have wage growth sucking. That leads to less money you can spend because everything else is costing more. And then we have savings continuing to decline, which means what? I'm digging into my savings because I can't sustain what's happening here. I'm hoping and praying things will get better. And I keep digging in there and keep digging in there and keep digging in there until the savings are gone. Then what? That's when you have to start looking around. How many phones do we have? Do we really need that built-in phone line, the internet package, TV, internet, all that? Let's get rid of that. Do we need the premium channels on TV? No, let's get rid of that. Matter of fact, let's get rid of the whole cable bill. Let's go to Hulu or something because that's outrageously expensive these days. You're going to start cutting. Now, of course, you should have been cutting before you got to that stage. When you first started tapping into those savings, that should have been the red flag. Time to start cutting. But it won't matter because here's the other thing. How many of these people out there in the world, and in Australia and the US, have already done some of those measures and still cannot write a $500 check? There's no chance that this will continue as next year housing prices went up another 10%. I mean, there's going to be a limit somewhere. Could they pull it off till January, let's say next year? I suppose. Sure. These people, they can certainly drag this crap out, can't they? But all you need to know that is in the near future, which could be the next year, could be this year, could be 2 years. That's what I'm saying, near 2 years or less, in my opinion. This puppy's going to blow. Economy, markets, real estate, I cannot see this continuing. Why did the Dow drop 237 points today? What changed? They still haven't got the debt ceiling deal done. They ain't even talking about that yet. They haven't even got started on that yet. Now tomorrow, or was it by Thursday, they got to have the vote on the Trump care / Ryan care, which I heard is a pile of garbage. Better than Obamacare for sure. They've taken out the individual mandate and the business mandate. Thank you very much. Because if I'm not using a product or service, don't you dare force me to pay for it. That's messed up. And you might even argue, well, then why do you pay that in your property tax? Your kids are homeschooled, Jason. You don't use the school system. And I agree. I agree. But you ain't getting away from property taxes. It's baked into the cake. You know what I mean? That fee that comes out of there that goes to schools, that's baked into the cake. I can't possibly say, well, I don't use that facility. So, because again, the theory is that we all are a community, whether we are 80 years old, 70 years old, grandchildren, we all just keep pitching in for the sake of the community, for everybody. But don't you tell me I've got to spend $1,000 minimum to $1,200 for my family every month just to have insurance that I don't use? No, sir. So I'm glad that crap is taken out of there. But from what I understand, it's still a mess. It's still a mess. I'm telling you, the party is getting started this year. The party is going to be visibly getting started this year if you haven't already been able to tell. Okay? Take care.